Good day, fellow crypto enthusiasts and traders. Welcome to another episode of the Unpackers. And we continue our journey talking to interesting individuals in the crypto space. We are talking to traders or people who are building extremely cool stuff. And today we have as our guest someone who is a builder, and I'm very pleased to have him here. The man goes by the name as Sergio Tesla, but he also listens to his real name, Marnik Verschoor. Welcome, Marnik.
Definitely. Thank you. Thank you for having me.
I think you are on your way to Curacao, if I'm not mistaken.
Tomorrow morning, up to the Caribbean.
That's great. And then Amersfoort is a good place to have a detour.
I mean, I'm considering staying here instead of going to the Caribbean, but
Yeah, why not?
Amersfoort aan Zee is also called.
yeah, exactly.
Yeah, it's gonna happen sometimes.
I would pack your suitcases and go
Yeah,
to
I'll probably
Curacao.
will.
So
Probably
you're the founder of Minoma Analytics. So today we're going to talk about facts and figures and data driven.
Love it.
Something that I really excel in, not really, but that's why we invited you.
Yeah.
What is Minoma Analytics?
Yeah, so Minoma Analytics is a statistics platform that, in the simplest essence, provides traders with statistics that they can use to make data-driven trading decisions. So what I basically do with Minoma Analytics, I scrape data. So I scrape years of historical data, and then I transform it, and we aggregate it into actionable insights that you can use to make data-driven trading decisions. And it updates continuously. So, every 5 minutes it updates, and it updates certain statistics based on the current price action. So, for example, you see Bitcoin right now is moving up in this many percentages. And then historically over the last 3 years, depending on what date range you have selected, it will say that, 80% of the time price will have moved up or will have moved down and so on. So in the simplest essence, it is a platform to enable data-driven trading decisions.
Okay, so the product basically is it's a dashboard that I open up, and then I can see what the numbers guide me towards certain setups.
Exactly, yeah. So it's mostly designed to create more confidence in establishing a bias. So, for example, I guess it also came from what I struggled with because I did trade before. What I struggled with was really determining a bias. So what I found myself often doing is taking trades against the trend. So, for example, price is trending up, and then I would just short. And then, I think it's very relatable. And so for me, one of my main mistakes was always trading against the trend. And therefore, at some point I started developing statistics that kind of could help me with, how do we determine which way price is most likely to go? So the main purpose of it in its current form is to help provide statistics that can help people determine which way price is most likely to go. And it does so by combining a certain set of time-based statistics and distance statistics. And in that way, you can more confidently say by hard data which direction price is most likely to go. So say you're halfway in the day, Bitcoin has moved up with a couple of percent. You can see that, only in 20% of the cases will price now reverse and take out the low. And in 70% of the cases, we will move higher. So then you can conclude, okay, it looks like price is going to continue up.
Okay. When did you start, just to take a step back, when did you start your trading career?
Yeah, so that was in late 2020 or early 2021, I would say. So I was working a job, my first job after university at a big corporate bank. It was Rabobank, so close here to Utrecht, actually.
Yeah, because you're Dutch, huh?
I'm Dutch, yeah. I'm from the Netherlands. So it all started from my first job, I knew that I didn't want to work for a boss. I always wanted to, do something for myself, have the freedom. And I knew that even before I started working. I actually tried to set up a business while I was still doing my master's degree. Amazon FBA, failed miserably. But, good learning experience. So
Yeah, sure.
I had to work. And then, I started working, but always with the aim in mind. Okay, I want to do something for myself. So that was always, my vision going into it, and especially because I wanted to go back to Lisbon, Portugal, where I live now. And because I was studying there, fell in love with the city. And, this was all pre-COVID, so it's more... working from home was not really a thing yet, and I didn't know about trading. So I worked at the bank, and this was not financial related. I was working in IT and later in HR. And then after 2 years, basically there, I said I had a very good position at some point. It was actually very nice, but it was kind of like a golden cage, So it was like really good work-life balance. For a starter, I had a really good salary. I made a promotion pretty quickly after a year. I was working 4 days a week, not even 8 hours a day at some point because I put it in pretty efficiently. But it was also that sense of like, okay, this is not going to give me the challenge and the fulfillment that I need. So around that time where I was doubting whether I really wanted to continue working at that job, well, I knew I didn't, but it started more and more getting to that point where I was like, you know what, I'm just going to quit and I'm just going to do something for myself. So around this time while I was thinking about this, I was already trying to find online business models and, I was working 40-hour weeks, but besides that, I was putting in another 30 or 40 to find something. Long story short, eventually I decided, you know what, I'm just going to quit. I have like a year ahead of me in terms of savings. I'll figure it out. I didn't really have anything yet in terms of cash flow. And right before I made that decision, for some reason, I decided to invest in Bitcoin. So this was at the end of 2020 for the first time. It was a friend of mine had been telling me since Bitcoin was 200 euros to invest in Bitcoin. I should have taken his advice. I didn't. But then at that point, I don't know, there was something in the air. You just kind of felt that same friend was saying like, man, I've never felt this kind of energy. My brother said like, man, we should invest. So then I was like, you know what? Let's invest. So I invested. 2 months later, I quit my job, handed in my resignation. I was like, okay, I'll figure something out. My initial idea was to do some affiliate marketing, high-ticket affiliate marketing, something completely else. And then, pretty much as my job ended, the bull market just had that enormous leg up.
Right.
So then suddenly I saw my net worth increasing by quite a bit, and it just kept on going up. So naturally, I got like peaked. My interest got peaked. I was like, okay, what's going on here? And I started diving more into Bitcoin, and then I started diving into blockchain, which I think you can appreciate, like the technology itself. And that's really what hooked me. And then, because I was like, that's when I saw that blockchain is really transformative technology, and it was probably gonna revolutionize the way we do business in a lot of ways. And that's kind of the thing that triggered me to stick into it. And I just threw the affiliate marketing idea on the side, and I just decided, like, you know what, I'll go full-time crypto. And obviously, like everyone, I thought I was a genius because, everything was skyrocketing anyway. And I was like, I've made it now. So that's how I got into crypto.
But now, now you call yourself not really a trader, but you call yourself obviously you're basically the founder of a startup or a company.
Yeah.
And not so much a trader.
No.
Now you are busy with P1 and P2.
Pivots, yeah.
Pivots. Yeah. What was the spark to say I want to stay in this sector, but not purely as a trader, but to build something? What happened there?
Yeah, so that was a whole journey. So it was a really big process. I think to try to explain it in not too long is what happened was that for a long time I really dialed down on, okay, I'm gonna figure out trading. That was my main goal. And I spent a lot of time actually full-time trading. And in that journey, I started gathering statistics because I heard, well, statistics is confidence. Oftentimes I heard this. This started very simple with gathering statistics on my own trade performance, so my wins and my losses and all that. And eventually that led to more advanced statistics, to, simple manually gathering statistics on Excel, and then an Excel file on steroids, and, automated scrapers, and it just escalated from there. And during this whole process, I was always sharing statistics.
But that's in you. You're a numbers guy.
So
you like that stuff.
My master's degree was in data science.
Okay.
So for me, it was like a very natural way to do it. And my bachelor is in computer science. So I too am a nerd.
He's a nerd.
Yeah, we're nerds.
Very comfortable now.
Yeah, okay.
Yeah, so naturally for me, going into the numbers was like a logical thing to do. Because, I do really like numbers. My friends always joke around that I like to measure everything. So for me, going into statistics was very natural, and it also fitted my background. And what happened is that at some point, I reached a point where I was sharing a lot of these statistics in different Discords, and people were really interested in the statistics. So there they were saying like, man, these statistics are crazy. Where are you getting them from? And they were always surprised when I said, oh, I gathered them myself. So I noticed there was a lot of interest. And then I reached a certain point in my statistics or in my trading journey where after 2.5 years, I had some of my best months, actually, my best 3 months in the last 3 months, which was funnily enough also the time when I transitioned into a builder. I think there's a couple of things to that. 1.5 years before that, my dad suddenly passed away, and it just changes you as a person, right? You don't come out of that in that situation in the same way you were before that. So I started questioning a lot of things. Like we also had, like at the start, the first half year, no time to process anything. We were too busy arranging all kinds of things. And then I started, after a year, you start questioning everything. You start questioning your view of life, or, with like the meaning, and you just start reevaluating a lot of things that are, what's important to you, what is not. And I think I just reached the point of that even though I started getting good results, I also realized that my motivation was kind of waning and my discipline was waning. Long story short, what I eventually, the more I kept asking the question, the more I realized that, I didn't see for myself, looking 10 years in the future, that I would really be trading full time, like 10, 12 hours a day.
Right.
It just didn't seem like something that, I was living in Lisbon, Portugal at the time, so I had moved there. And I was kind of like, okay, but if I'm spending 12 hours behind my computer a day, then, is it really the freedom I'm looking for? And I'm not saying it's good or bad. It's just for me personally, I decided that, that's not really the thing that will give me fulfillment, I think. And therefore my discipline and my motivation for it waned. And what I then decided to do is at first, I was really contemplating, what am I going to do? And it was not that I deliberately said at that point, like, okay, then I'm just going to build a business. I just thought, at that point, I thought, I would like to do something hybrid, much like what you guys are doing, what Yip is doing. You have a community, you're trading like all together. It's more like a social connecting thing as well.
Right.
So I knew that a lot of people were interested in these statistics. So what I thought at first was just, let's try a beta version of this project. Like at that point, you have to understand.
Because you started this officially at the beginning of this year, right?
Officially, yeah, beginning of this year, January. Yeah. And I did the beta, started at October. And I decided to do the beta in September. So and when I decided to do the beta, it was still an Excel file. Like it was terrible. If you look at it now, it's really bad.
That's how you started.
But that's how you start, yeah. But that was, when I was just using it for myself. And, I just basically came up with the idea of like, let's just see if anyone is even interested in this. So that was like the initial thought. So I announced a beta in some community I was in, and then got 12 members interested, built like the beta, and it took off. Well, it went from there. Like the first response was really good. So that's pretty much how I started it. And that just gradually transitioned into me becoming a builder, because at some point I realized that, okay, this is costing really a lot of time, because I built everything from the ground up, right? I developed it. The whole programming of the website, like everything. So it's really a lot of work. And at some point I realized, okay, it's kind of like you cannot chase 2 rabbits at once and catch both of them. And I really felt like at some point I had to make a decision. Okay, either I pursue trading or I pursue building this.
Right.
And for me at the time, it felt like building this platform was something I felt more interested in, and also something that was more aligned with my strengths and skills. So that's why I decided to, gradually, there was like a specific moment, but gradually I transitioned into a builder.
Well, and I guess a lot of people are enthusiastic about it, even more so. There's a guy sitting next to you who's actually even this week's are saying, I'm getting more confidence in it and more happy about it. How is this data going for you? How does it help you?
It helps me quite a lot, actually. I think I've been using it now for 5 or 6 weeks. I remember when I asked you to come on the podcast, I wasn't even using it, but I was seeing quite a lot of other traders that were using it. And at some point I was like, okay, let me message Marnik and see what we can arrange. And at that time I was very busy, so he already granted me access, I think, but there were a lot of tutorials that I had to go through and all of that. And
yeah, that's
quite a lot.
There's a lot of tutorials that you have to go through, because at the beginning when you open up the dashboard, it's quite overwhelming, because there's a bunch of information that is coming your way. Now that I've been using it for 5 or 6 weeks, it's super, super simple. Like literally you pick an asset or you go to like the summary page, and at first, like Marnik tells you to first do your technical analysis and figure out a bias and potential trade based off that analysis, and then do the statistical analysis to use it as confluence. But now, to be fair, like I just use it as use statistics first to figure out a
Seriously?
bias.
Right.
Okay.
Yeah.
First, like for the week, and then for the day, and then I see, okay, is my technical analysis confirming that bias that is being formed by doing statistical analysis? And if that is aligning with each other, then I start looking at the execution. So for example, let's say the statistical analysis is pointing towards more upside for the week and towards more upside for the day. But then my technical analysis is not really offering me any confluence on that, and is maybe pointing towards an important resistance area, or maybe a potential reversal, or maybe there's a lot of liquidity down below on the chart. Then I decide, okay, I'll leave it what it is for the day, and I don't take any trades. But if I have a high probability based off the statistical analysis, and then my technical analysis is pointing towards the same direction and offering a clean execution, like for example the near trade that I took this week, I had a lot of conviction that the trade was going to play out, because the weekly statistical analysis was giving me a very high probability invalidation below the current weekly low, the P1, the pivot one. Nice one.
Everyone who listens to this by now, I think,
Has
knows
no,
who's doing it.
has no clue what we're talking about, but you will soon probably. And then the weekly statistical analysis was also pointing towards more upside for the remainder of the week. Then I just went on to do the technical analysis, and in this instance, I didn't have any confluence of the daily statistics, but it was completely irrelevant. And then my technical analysis was showcasing a very clean structure, both liquidity-wise and market structure-wise, and then also a very clean area to execute the trade. And then I had a lot of confidence that the trade was going to play out, and it did.
Even
And
despite the FOMC.
yeah, despite
Yeah.
as you guys know, I never let news events kind of influence my decision making on trades, and so yeah, I executed the trade. But like I said, first these days I just do the statistical analysis, and like the further the week progresses, the more information that you have, so the higher the probability becomes of your
Yeah. Right. Yeah.
statistical analysis. But honestly, like it's been kind of mind blowing, I can say, after 6 weeks of using the statistical dashboard, and that's all I can say, man. It's crazy, to be fair.
Yeah, I keep
Great.
doing it because I also stumbled into all the tutorials, and I
Yeah.
still need to go through them. But I'll pick it up a bit
I
by bit. Also
I was
because
lucky,
you.
I must say, because I asked Marnik for a bit of one-on-one guidance.
That's a trick.
But I must say that since I'm using it in a lot of live streams, I'm also getting a lot of messages from members
Yeah.
that are
Yeah.
willing to purchase a membership at Marnik's place. So then I
Yeah.
send them over to Marnik, and that way we help each other a little bit. But
Ah,
I definitely had a very good mentor
Yeah.
that explained everything to me, because I am a bit of a boomer with those kind of things. And,
is he saying that he's a boomer?
Yeah.
with those kind of
Take it as a compliment.
yeah, that's more like Ilko style, you know, the nerdy things.
Hey guys, let's talk a moment about BrightFunded, which is our partner of this show. BrightFunded is a prop firm where basically you can trade in a lot of assets. You can trade in gold, in crypto, and forex. And it's a way to scale your profits much faster. If you want to start trading, the link is in the description below. And yeah, guys, just have fun and good luck scaling your profits.
So
That's really my
I
style.
was curious. You just mentioned you started with your Excel sheet.
Yeah.
That was your data set.
Yeah.
Well, being a nerd yourself, you know that within every data set, you know the sentence shit in and shit out. So
Yeah.
your Excel was great because it was your own.
Yeah.
You're helping a lot of traders right now. I can't imagine you still using your own Excel sheet. So you have to have a set of data sets somewhere lying around, grabbing some data sets from sites, I presume.
Yeah. No, it's APIs nowadays.
APIs
Yeah. And it just resides in a database in the cloud.
in the cloud, and there you combine the data sets, and that's your
Pretty much. So I just save all the data. So the OHLC data, right?
Yeah.
The open, high, low, close data. Just save that into a database, and then I have like a reporting tool, and in that reporting tool, I do all the data transformations
Right.
to make it
Right.
the data model that it is. So the database itself, how it's saved, it's pretty simple, and then all the the magic happens at the
Right.
reporting tool itself.
great. All right, thanks.
Yeah.
Talking about magic, even though I'm not very much diving very deeply into all the data yet, there are a couple of people around you and in the Discord who provide you or provide the community with a bias or setups or even. And I often ignore these setups because I think my brilliant TA is pointing it otherwise. And that's because I struggle with understanding how statistics can be the basis for stuff going forward. I understand that facts and figures, but there's underneath it, there is something which I cannot grasp yet. And it's more a question for, I think, all of us, because that's not really the question that we can answer. But what do, let's say, grab a coin like Phantom. Apparently, you gather statistics, and then your data points towards certain bias up or down, even a distance. But it's based on all the data from in the database from the past.
Yeah.
What is it then actually measuring? Is it the algorithms which are buying all the stuff? Is it other market behavior? How does that work?
No, it's just the way to look at it is the way I always see this is it is quantifying historical patterns. So as traders, obviously everyone who's a trader, what they do is they take a pattern they see happening in a lot in the past and they assume it will happen again in the future, right? That's what you do as well when you have your setups and whatever strategy you have. For example, say price steps a fair value gap, and then you know from your whatever it is that you're collecting that most often price has a reaction from that. So what you're doing then is that basically you're saying, okay, we have this historical occurrences, right? There's a pattern in history. We see that, 70 or 80% of the time, this happens to give a reaction or go up after that or go down after that. And I think the important assumption is that, or the important notice here is that you're always making an assumption that it will happen again, right? I always say there's no such thing as probabilities in trading because you're extrapolating. And if you're extrapolating into the future, there's always unknowns because, what is important today might not be important tomorrow. And what might not be important now might be important tomorrow. There's all of these things, right? So the best we can do is create estimated or imperfect probabilities. And the best way to do it is to have data. So we want to know, because we're always making that assumption with trading, right? You just have to make the assumption. It works, but you have to make the assumption, okay, this happened 80% of the time in the future. So therefore, I think it will happen more or less 80% of the time again, until the market changes, right? Because the market is constantly changing. What the statistics are doing, or what the platform is doing, is it's quantifying these historical patterns. So in this case, I measure mostly on time-based statistics and some displacement statistics. So I just measure, okay, how far does it happen that price moves up by X amount and then moves back down again to take out the daily low. So what it does, it quantifies historical patterns. And what you can do with that is that you don't really have to ballpark it of saying like, well, I think this happens kind of this many times, but you actually have the hard data, which says, well, in this date selection, 80% of the time, price would continue to move upwards, or 20% of the time it would move downwards. So it's quantifying historical patterns. That's what the data is doing.
Okay, there's probably a lot of people watching right now that think quantifying and all like if I would have to try and explain it as simple as possible, because I'm also the kind of guy like you that wants it as simple as possible, and I don't even want to know why it works. I just want to know that it works and how it works. That's just me.
Now, in this case, I'm actually interested in why this stuff works. Yeah.
I really don't care. Like, as long as it works, like it works.
Fine.
Yeah, exactly.
This is a good point. I always say this as well. A lot of my streams, I said, I don't know why this is happening, but it is happening.
Yeah, exactly.
And that's the most important thing.
Yeah. And then there's two ways that you can use it, like both on the daily and on the weekly time frame, based on the daily and weekly time frame, I must say. And then there's either the timing that price puts in a certain high or a certain low for the day and week, and based off that timing, so maybe during Asia session or New York session or London session or post session hours, the current daily candle or weekly candle is putting in a low and a high at a certain session at a certain hour, and that is providing you with a certain probability of that low or high to hold for the day or the week. Okay. And then there's the distance statistics, and that is basically measuring the percentage of the move that price has made from off the daily open, I believe,
Yeah.
towards, for example, if the price so far the day or week moved up towards the weekly high or towards the weekly low or daily high or daily low. And that specific distance that the price made so far that week or that day is giving a certain probability for the opposite high or low to hold for the day or week or to get broken for the day or week.
Yeah.
And also giving a certain probability to get either a further bullish displacement or a further bearish displacement based off the distance that the price has made so far for that week or day. So what it is basically doing is giving you a certain probability for a certain high or certain low to hold based off timing and distance, which is basically not only giving you a very good bias for the day or week, but especially in my opinion, also a very good invalidation for certain trades.
Yeah,
like
you
it
mentioned
really
today,
offers
I
a
learned
very
it.
nice, like if price, for example, based off timing and distance, showcasing that a high or low has a 15% chance to get broken, it means that 4 out of 5 times approximately of your trades, you're going to have a proper invalidation that is not going to get taken out. So basically that means that your win rate is about 80%, if you think of it that way, at least you're losing only 20% of the time. Like whether or not the price is going towards a take profit is actually already irrelevant at that point, because you only lose 20% of the time, and then obviously based off where you enter and you execute your trade and where your take profit is, it depends obviously, but it is really providing with a nice edge, especially for your invalidation, but also to see, okay, is there a high probability for price to move further away from the daily or weekly open this day or this week? It is...
Yeah, it's unfair advantage, I think they call
almost,
it.
yeah.
Still, I would like to go one more question into the rabbit hole of why. You said it this Monday. I'll let Monday pass and let the statistics develop a little bit more.
Yeah.
I thought, fuck it. I still took a trade. Didn't go well, but okay, I have to learn everything the hard way. But then afterwards, I thought, okay, is all the data that you're scraping and providing patterns, is there a basis underneath it that perhaps on, let's say, in the weekend, on Monday, market makers, participants, whatever, prepare for a new week, and then they are starting a certain behavior, which is the why, which we cannot, which I'm sort of curious, which then starts in the weekend on Sunday, and then, happens over the next couple of days, and at the end of Thursday and Friday, then setups seem almost much more booming than.
That's true.
Is there a certain? Does that indicate, maybe that's my question, towards a certain behavior that they open up the shop of market making on Sunday and the end on Friday?
Yeah, honestly, I don't know, but I do have a hunch that could be the case. Yeah, I do have a hunch that could be the case. I actually want to integrate some statistics for that. I want to integrate many statistics, but for me, letting Monday skip is mostly just because I do find that once the Monday passes, there's a more clear, or at least a more confident sense of direction for the market. So, there's obviously exceptions. For example, sometimes Monday has a very clear direction, and then, you can be more confident. But very often I find that Monday is like the day for the market to make up its mind. And then Tuesday, there's just more confidence in the directional bias.
What is, for example, like the first time that I really became super, super interested in dashboard, I remember, like everyone knows about the Monday range, right? A lot of people trade, especially in Forex, but also in crypto. And everyone always tells their followers, their members, just the audience, that if you, for example, have a Monday candle and then on Tuesday, Monday high gets swept, that you should be looking for short starting Monday low. What this dashboard is actually showcasing is that at some point it was 17 weeks in a row, Monday put in either the high or the low of the week.
Yeah, crazy streak.
Or 16 out of 17
really
weeks.
a lot.
So there's people that their entire system is based off Monday range and then trading the deviations of Monday high, Monday low, and then targeting the opposite side of the Monday range. But then for Bitcoin, it was 16 out of 17 weeks, according to the statistics, where Bitcoin put in either the high or the low of the week on Monday. And that was the first time I was like, oh my God. And then I checked it back and I was like, holy shit. I have been paying attention the past few months to the Monday range. It's not where my system is revolving around, but I've definitely been paying attention to it. But actually, if you, for example, have a Monday candle and then on Tuesday, Monday high gets swept straight away, then Monday low has a very high probability to hold for the remainder of the week
Yeah.
based off the statistics. And at some point, 16 out of 17 weeks,
Yeah.
like calculate the odds yourself. It's fucking crazy. And then there's these people that are every single time on Tuesday when Monday high gets swept, telling everyone to short, or at least to be looking for shorts.
Yeah.
Yeah.
But actually, we should be looking for longs up on
Yeah.
the pullback, you know?
Yeah.
And that was the first time I remember that I was like, okay, this is actually maybe providing me with a crazy edge, because
Right.
that was a very obvious example, obviously. But yeah, that was pretty interesting to me.
Yeah, and that is one of the main benefits I've seen from statistics, is that also one of the reasons why it captivated me so much. I always held certain beliefs about the market, which is obviously a subjective experience based on, whatever it is that you believe. And oftentimes when, for example, you see something like this, and you can, simply because someone once told it, said like, oh yeah, that must work, Monday range, let's go for the low once we take out the high. But then when you see the statistics, like, your subjective belief gets obliterated, right? Because you cannot argue with
exactly
cold hard logic factual
Yeah.
data.
I tried.
It's like okay, once you see that, you're like, wow, apparently that doesn't work. And if you see this enough, then what I found is that it trains your mind to be more objective, because you see how often your mind's wrong, and then the statistics prove it wrong, because it's just like, well, you think this, but the statistics are literally saying the other thing. And then over the long run, it will teach you to think more critically of the market.
Do you have peers or other services who offer this?
I haven't seen anything like this. I'd like to believe there is not it. Yeah, it's nice to be a first mover, but I have not seen it myself, and I have not heard anyone that said something similar as it, or at least not. Yeah, no, I think it's pretty unique.
I did some small research, but I couldn't find anything.
Yeah,
No.
I haven't heard anyone who found something similar. So that's nice, and that's exciting as well, right? Like doing something like what you just said, like first doing statistical analysis. I mean, how cool is that? Like, that's what when I first built that feature, then I remember I was, drinking my tea in the morning, and I had already figured out the biases, and I was like, wow, this is pretty cool. So that's I find it very exciting to build.
It's
stuff
very
that is,
relaxing as well, actually.
It's
Like,
relaxing.
You talking about numbers that they are relaxing. Okay.
Yeah, like it doesn't leave a lot of room for error, And then also, for example, my trading system mainly revolves just simple price action and market action and liquidity and ranges. That also doesn't leave a lot of room for error, because market structure doesn't lie, ranges don't lie, liquidity is a bit more subjective in my opinion. But then also having the statistics that don't lie as well and are very straightforward, and like either you listen to them or you don't. And if you don't listen to them, and I've done it a few times over the past 6 weeks, and it didn't end well. Like, honestly, like I think there were just 2 or 3 days over the past 6 weeks where I was wrong on my bias. So it's still the execution, for example, I get front run still a lot and that kind of stuff, but that is obviously part of the game and also due to market circumstance. But bias wise, I think I was wrong 2 or 3 days, and those were the days where I was going against the statistics.
Yeah, right. Yeah.
And now I'm trying to figure out like confluences where I should choose not to trade, for example. Like I also explained in the beginning when I started talking, when my technical analysis doesn't align with the statistical analysis, I choose just simply not to trade. But yeah, it has been a game changer so far, and like I couldn't go without it anymore. I think like I could, and I would still be profitable, but I wouldn't be as profitable as I think I will be in the upcoming years with this statistical dashboard. So I'm making a very nice advertisement right now.
I wanted to make that bridge.
Like we need to create an affiliate link as soon as possible. After
before this podcast comes out.
No, but honestly, it's just the truth.
Yeah.
And yet you're still building this alone in monk mode. Yeah. Where is this adventure in a year from now?
Yeah, so I do have quite big plans. I think there's like me and Yip have talked about this as well. It's pretty much a bottomless pit. It's like a well that just keeps on going. You can take it anywhere. So right now I'm building Minoma Analytics 3.0 is what I call it. I'm gonna put a lot of new cool statistics in there. Some of the statistics you requested about the sweep statistics, the sessions. Anyway, so first I'm going to build that, and what that basically does is going to give a foundation to add a lot more different kinds of statistics. So if you're asking me where I'm a year from now, then what I think is going to happen, there's going to be a lot of different kinds of statistics that are going to be suitable for different market environments. So right now, I think it's mostly suitable for trending market environments. I want to make sure it's going to be suitable or has statistics for ranging market environments, trending market environments. Other than that, I want to expand into other markets. So that's Forex, stocks, indices. Indices is apparently, or not apparently, is one of the most requested features there are. And I'm making some good progress towards that. We've been looking into it. And we think the assumption is that the statistics are going to work even better there because it's just a little bit cleaner price action. And I will need. Right now, I'm still alone, yes, but in a year from now, I suspect not to be alone anymore and to also have some nerd help as well.
Team members.
Because I will need help to build all this. Yeah.
Good stuff. We will definitely be following you. We still like to request also that mentorship that you gave to Yip to understand a little bit more.
Definitely.
Man, it's been a pleasure, absolutely. And so many questions left still for you, but we're getting hinted that we're over time. We will definitely keep following you, and thank you for coming to Amersfoort. And let's see where in a year from now. Thank you for coming here.
Also,
Thank you.
thank you so much for having me.